Happy Friday, traders. It's 8 a.m. Excuse me. It's 8 a.m. Chicago time, 9 a.m. Eastern on Friday, the 23rd of June, 2017. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The overall market stance today, again, is mixed to a risk averse. Money looks like it is slightly skewed towards safety, although really it is a mixed bag. Gold is leading the pack again at $1,258.20 on the August contract, up almost $9 or 0.71%. The DAX and the Eurostox yet again are laggards. Now we've seen 3 days of the Eurostox and the DAX being laggards, and then we see the market rallying and then falling off in the afternoon. The Nasdaq is pretty much break even. It's down 3 ticks. The S&P up 2 points. So again, really a mixed bag coming in here. Uh, I want to remind you as I start here that it is like Friday. I'd really appreciate if you would find the thumbs up or like button on the stream here and hitting it. Please don't forget to do so. As far as news and what could be driving us, yesterday's little pop was on the release of the healthcare bill. The healthcare sector has been pretty strong for the last several days in anticipation of this bill. It came out and the market rallied yesterday, had an impulsive move up, and then just went absolutely completely deadly sideways until the close, where it sold off and moved back to the lower distribution in the S&P 500. So this heavy anticipation. There are four senators who are against the bill. Republican senators, Senator Rand Paul, Ted Cruz, Mike Lee, and Ron Johnson are against this bill because it does not completely repeal Obamacare. So the expectation is that these are the only four missing if every other senator votes along the party lines. Stress tests yesterday on 34 U.S. banks passed, showing that the banks will likely withstand an extreme recession and that they're well capitalized. Also, the odds for a Fed rate hike going into the rest of the year went up from 16 or 14.2% to 16% to now sitting at 27.3% based on the Fed funds rate, Fed fund future. And then a reminder that this is the first year anniversary of Brexit, and not much has happened since the conclusion of the vote last year on this referendum. Today, the UK released its terms for European Union workers. And it looks like it's another thing that they're likely to argue about. Other than that, not much else this morning. Looking at the overall picture, I'm not seeing too much influence here. The Eurozone released its preliminary manufacturing PMI, came in strong. It's the 47th monthly expansion. Came in at 57.3 versus 56.8. The one for Germany came in at 59.3 versus 59.0. And then other than that, there really isn't much to report. Looking at what we're expecting for the session today, oh, that's odd. My calendar didn't update. All right. Let's see. So I'm looking at the weekly calendar instead of the daily on the service that I use. So today we get the 9:45 a.m. Eastern U.S. Services PMI prelim for June. At the same time, manufacturing PMI prelim. At 10 o'clock, we get new home sales for May, expecting 600,000. And then we have a couple of Fed speakers. We get Fed Speaker Bullard at 11:15 Eastern today on monetary policy in Nashville. And then at 12:40 p.m. Eastern. We're looking for Fed Speaker Mester in Cleveland. That's what's driving the calendar and the news this morning. Let's take a quick look at what we expected yesterday. Yesterday, the primary hypothesis was for the market to make an attempt higher and to sell off for the key impulsive move to be down, to be initiative away from the current value, for us to check below, to continue the downtrend, and to check below the prior day's low. So expected a lower high against the 3550 MC point of control and a lower low with a close in range. That was a primary hypothesis. It started to look that way early on, but then that didn't actually work out. Found the morning trade difficult. Actually, the overall trade yesterday was difficult. We'll go over that. There was no real directional, other than news. There was no real directional skew to the market, like nothing obvious. So, just an impulsive move on the healthcare bill, and then sideways. So sideways, healthcare bill, sideways. And then the sell-off in the afternoon was also pretty hard to predict. Here's the secondary hypothesis, which is basically what played out in a way. We could not get to the 24.41.75. We ended up turning at 24.40 or so. And then we finished up. Remember yesterday, my skew was to the upside. Other than Hypo 1, pretty much my bias was to the upside for the market to take back this downtrend. That we've had all week. I mean, the week, I'll go over the week in a minute. But overall, I was looking to the up for the auction to continue higher, as it was having a hard time holding lower prices. Here's what actually happened. Oops. By the way, third day in a row where the opening swing was basically the initial balance. It's kind of odd. We don't see that often. So we open. We have this tight zipper at the open. Market drops. Then we get basically the first view on an opening swing. I could not consider this an opening swing up here. We test the open. We find sellers, rotate down, not quite to the low. We make a lower low, and then we push into the 6-point rotation on the healthcare news, and then a small pullback, and then we continue on to 38. Then we go to 38.50. Then we go to 38.75. Then we go to 39. And then we just sit sideways, and we end up with a double distribution profile with a cutoff at 34 and a quarter. So we have two distributions here. Remember, double distributions make it easy to see what the auction is trying to do and what the cutoff point is. So yesterday I was watching the 34 pretty much all day, but then on the close it just rammed right through and brought us back. If I turn on the developing point of control, this faint line that you see here is basically following where the most traded price is all day. So you see it dropping early on, going up, dropping. There's really no real consensus to what it's doing, and then you see it pop up and stabilize here, move up after the healthcare news, and then just shift a couple of ticks up or down until the close basically, and then it comes down here and then stays down here. So overall, the market's looking for consensus, and it's looking for an even spot. We thought we found it up into that 36.75, which is in line with the MC point of control, but it's not able to hold on to these prices. Now let me squeeze this a little bit farther. We saw the same thing here. We see a strong push up, then a strong counter move down, and then the market finishing in the lower distribution. This day here is basically somewhat of a skewed trend. And the market, again, closing, a little bit higher, closing in the range, just like it's been doing pretty much every day. Yesterday, the day before yesterday, it missed closing in a range. I mentioned it was supposed to not supposed to expect it to shoot up into the range. It missed, the closing print was just below the prior day's low. But overall, the market tends to move back into the range. And this is what we have right now. And it's a dull trade. It's a summerish trade. I mean, if you were watching the open, we did get good volume on the open and throughout the opening morning. So if I expand this out and we look at, here's the opening bar right here. This is the opening bar. This is volume. The yellow is the 20-day average for that time slot. This is a 15-minute chart right up here. It says 15 minutes in the title bar. Uh, you see this. Overall. You see this bar, this yellow bar, which is the average, is just slightly below the actual. Okay, so the expected was 87,196 contracts. That's the 20-day average for that first 15-minute time slot. The actual was 91,000. So we got 4,000, about 4,000 more contracts. And then as the day goes on, we're still getting decent volume. I mean, it came up short for a while. The healthcare news popped us above, so you can see here the healthcare news had some pretty good volume, and it's higher than the average for that time slot. But overall, the volume isn't like half of what it normally is, what it would normally be, uh, and it's yet we're still pushing up, having a hard time staying up, and then coming back down, but ending up in the middle of the range. So we're trading almost like we're in the summer, but we're not quite there yet. Yes, technically it is summer, but it's not quite the time of year for it to slow down this much. We still have July and August to contend with. As I include yesterday's um, volume at price, watch how this profile is changing. And you can see there's very little change. Like we just keep stacking, we keep filling in the profile in the middle against the point of control. And that's where we are. Overall, we're just not doing much other than basically filling in. We're at all-time highs. We're only about 20 points away from the all-time high. Currently, we're trading 34 and a quarter. Does that remind you of anything? Yes, that's the LVN from yesterday. 34 and a quarter also is the key LVN from Wednesday. Both of those prices overlapped. So if we look closely here, we'll see that overall, we're just repeating the same thing. There's the key LVN. See the IB low of Wednesday is the IB high of Thursday. So we end up with this low volume node here, low volume node there. Overall, it's a short-term traders in control playing intraday prices. There isn't really a driver in here except for news, and there's been, a fairly consistent flow of news given the political climate. But overall, there's no real market generated direction, right? So earnings, news on the particular stocks, nothing. It's the market anticipates better and better and better conditions for corporations, and overall, there's still room to the upside. But there isn't much gyration. There is no cause for anybody to sell their holdings at this point. I'm waiting for that day, not because I'm a bear, but I'm waiting for that day so that we can get some volatility and some opportunity in the market, right? So that's where we are. Looking at, I'm getting a little long-winded here, so let's cut this short. Here's the weekly. Okay, I've split the profile. There's your Monday, it's in gold. Tuesday, it's purple. Wednesday's red. Thursday's green. So we have a higher high, higher low on the weekly. We're still one time framing up. We're still getting higher lows on the weekly. Every week we're getting higher lows, higher lows, higher lows, unless we sell off today down into 24.16 even, 16 quarters last week's low. So the intermediate time frame is bullish. But this whole week, the intraday time frame, the daily time frame is bearish. And we have this conflict between the two, and all we've done is just continuously tested lower and lower, except for yesterday. Yesterday we almost took out the prior day's high, which would end the down the one-time framing down. But overall, with one-time framing down on a daily, this is the reason why Hypo 1 was open, test higher, and then go lower. Just playing on this trend, continuing lower. There's less volume at the top than there is at the bottom. The market's finding consensus inside of this box here, which is where our MC is, and we're likely to be very, very, very choppy this morning, and that's the conclusion there. So when we put this profile together, we unsplit it, we can see that the volume is down here. Okay. Yeah, don't forget today there's a Russell balance that occurs at the end of the session. That usually is fairly volatile. It hasn't been for the last year or so, at least I don't remember the one from the prior year. But last year's was pretty quiet, but normally it's pretty noisy. Okay, it's pretty noisy. And don't forget, July 10th, the CME starts trading the Russell, starts putting the Russell on, and you'll be able to get the Russell on your CME index data feed, and it becomes something that you'll get margin credit for against other products for those people who spread the indices. So that's a big deal to me. I've kind of abandoned the Russell on the ice, not trading it at all, really. I think in the last year, maybe once or twice. So I'm glad that's coming back in. It used to be called the ER2 on the CME, and I think it moved 2005. And now it's coming back to the CME. It's going to continue to trade on ice, but it's very expensive on ice. Of course, if you're a member, as I am, you're not getting the member rate on the Russell at ice. So it makes a difference for me at least. Anyway, what are we expecting today? Chop, 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 chop. Same thing as yesterday. Open, test higher into the 35.50 area, and then I'm looking for an attempt at the low. I'm looking for this low to be taken out today. I'm looking for 27 and a quarter consolidation, and then a move back into the low end of the range. Same sheet of music every day. Same sheet of music, repeating and repeating. Okay, so that's Hypo 1. Hypo 2 chops around, gets down into 32, attempts and gets through the bottom. I'm going to look for a failed attempt at the low, a push to 35.50 consolidation, a push through, and then finishing where we opened today. I'm not expecting much change and movement away from where we are for Hypo 2. I'd love to see a trend. Hypo 3 is looking for a test up, an open test drive lower. Hypo 4 is looking for an open auction that just basically is very quiet, and then a drive up at some point after the first hour. So overall, not huge expectations. It is Friday. Don't forget, Friday is a great lure to get emotionally tied with the market and to lose your senses and end up with a big hole in your pocket coming into the weekend. So take it easy today. Just expect a lot of chop, expect incomplete moves, expect lower time frame traders to be in control. Okay, good luck and take care. I'll catch you on Monday. Have a great weekend.